Bollinger Band Indicator. In this video, I'm revealing the best strategies that you can use with the Bollinger Band Indicator. So without further ado, let's get on with the video. The Bollinger Band is one of the most famous trading indicators, and the reason that most traders use it is because the indicator can be utilized in various ways, but statistics show that only few percent of the traders who use the Bollinger Band indicator use it correctly. Other majorities tend to use the Bollinger Band incorrectly. That being said, stay around until the end where I show you how we can make use of this indicator. Even better with my popular optimization techniques, and if you want to see more content like this, then click on that subscribe button. At the end of this video, you're going to learn the basics of the Bollinger Band Basic and the best setup, how to trade Bollinger Band Touch Reversal, how to trade Bollinger Band Squeeze, how to trade Bollinger Band Break Reversal, and how to trade Bollinger Band plus Divergence. Without any further delays, let's get started with the Bollinger Band Basic and Setup. So, what is the Bollinger Indicator? The Bollinger Band is designed to discover opportunities that give investors a higher probability of properly identifying when an asset is oversold or overbought. In simplified terms, you can use the Bollinger Bands to identify overbought or oversold trade entries, but also you can use it to identify breakout momentum trade entries. So, to access the Bollinger Band Indicator, find your indicator tab at the top here. Search Bollinger and select the indicator, and it will appear as an overlay on top of your chart. We're going to change the settings a bit by clicking on its setting icon. First, increase the middle line thickness to the second one. For the upper band, change the color to white and increase the thickness of the band to the second one. And also, apply the same setting to the lower band and you're ready to go. Here is what you need to know about the Bollinger Band. The middle line is a 20-period moving average. The upper band is 2 standard deviations above the middle line, and the lower band is 2 standard deviations below the middle line. The two bands are used to interpret market volatility. When there is low volatility, you will often notice that the bands contract, and this mostly results in a sideways consolidating market. When there is high volatility in the market though, you will often notice that the bands tend to expand, and this mostly results in a trending market. In order to become profitable with any indicator, you will need to understand that indicators are not magic. It is very difficult, if not impossible, to be profitable by using only indicators for your trades. For us, we only use them to support what we've already established with price action to increase the quality of an already good trade opportunity. With that being said, let's dive into the best strategies on how to use the Bollinger Band Indicator. One of the popular ways that traders use the Bollinger Band is as a support and resistance. You will notice that when the price reaches the band above, it can act as a form of resistance and bounce off it and reverse downwards. When price reaches the band below, it can act as a form of support and bounce off of it and reverse upwards. So to increase the quality of the support and resistance strategy, you can do two things. First, apply it to a sideways market. Look at how the bands are moving horizontally and price is moving sideways. So in this type of market movement, whenever price hits any of the upper or lower band, it results in quality reversal. The second way to get the most out of this strategy is to pair the band touch with a key level and candlestick price action. Let me show you. You first identified your key level because of this reversal point here to the left. When price comes back up to the key level, notice how it also lines up with where the upper Bollinger Band is, making it an area of confluence. You then wait for candlestick price action to occur, which you've had through this long wick candle that formed right at the key level and the upper band, which shows a reaction to the level. One thing you must have in mind is that a reaction does not equal an automatic trade, so you need to look for a trend change confirmation to show that the upward trend is over and that the reversal has begun. Trend change price action comes in many forms, but in this case here, a simple way would be to wait and see if you can get a momentum candle like this to form off the level before looking for a trade entry short. For a long trade, this works the same. You had your key level here because of this reversal point when price came back down. You had a long wick candle form at the key level and after the lower band, making this an area of confluence. Then once you had the momentum candle form off the level, you will look for a long trade entry through the same time frame or through a lower intraday time frame. The next strategy that we are going to be looking at is how to trade Bollinger Band squeeze, and we're going to look at this strategy from the founding laws of the creator of the indicator, John Bollinger. According to John Bollinger himself, who states that periods of low volatility are often followed by periods of high volatility. In simplified terms, when you notice a squeezing or narrowing of the bands, that represents low volatility, which then might lead to a breakout after with momentum and high volatility. So let's look at how you can use this strategy with your trades. First way is to apply this to trend trades. For example, you have your moving up trend, the band squeezed together, then once price breaks the band above this signal is a continuation of the larger uptrend and you would look for a long trade entries. Going in the opposite direction, you have your moving down trend. The band squeezed together, then once price breaks the band below, its signal is a continuation of the larger downtrend, and you would look for short trade entries. The second way to use the Bollinger Band squeeze strategy is in reversal trades. For example, here, you have your moving up trend. The band squeezed together, then once price breaks the band below, this signals a reversal of the trend and you would look for short trade entries. Going in the opposite direction, you have your moving down trend. Band squeezed together, then once price breaks the band above, it signals a reversal of the trend and you would look for long trade entries. Now, to increase your win rate with this strategy, you would use the following variations of the Bollinger Band squeeze that is also a pattern formation. For example, you have your moving down trend. Your band squeeze here also forms a channel pattern by connecting the swing highs and lows. Then once price breaks above the pattern, it also breaks outside of the bands. This is a higher quality reversal trade and you would then look for long trades through the same time frame or through the lower intraday time frame. This also works the same for trend trades and in both directions. So next is trading a Bollinger Band squeeze that is also a trade setup. You have your moving down trend and your band starts squeezing together. This reversal points here gives you your support level. As price came back down, you had multiple candlestick patterns form right at the support level, giving you a long trade setup. Now notice how this long trade setup is occurring inside of the Bollinger Band squeeze, which makes this a high-quality reversal trade setup. Once price breaks the band above with momentum, this acts as a form of trend change confirmation and confirms the long trade reversal setup. This is then when you would look for a long trade entry point to the same time frame or through the lower intraday time frames. This again works the same for trend trades and in both directions. So let's move to the next strategy with one of our best ways of using the Bollinger Band. For then, if you have any suggestions on the topics that you would like us to cover in our next video, kindly leave them in the comment section below. Also, to show your support, please hit that like button, subscribe, and turn on the notification bell so that you know exactly when new content is released. Last thing, make sure to go use our link in the pinned comment below to sign up for Bybit and claim up to $4,500 in welcome bonus. So, this strategy is very simple to understand and follow. It involves looking for a break outside of the bands like this and expecting price to reverse in the opposite direction. In this situation, there are two kinds of Bollinger Band breaks you need to look for. The first one is where you have a slight break and where the majority of the candle is still inside of the bands. This is a good quality break. The second one is where the candle breaks but the majority of the candle body is outside of the band. The further outside of the band it is, the better, and evidently if the body is completely outside and doesn't touch the band at all anymore, that is the best. This second type of Bollinger Band break is a high quality setup as it represents a very overbought or oversold region. Now, there are two ways of using the Bollinger Band break strategy, starting with the first, which is combining Bollinger Bands with a key level. For example, you had your key level of support here. Because of these reversal points, as price reached the level again, you had a Bollinger Band break right at the key level. Once you've had a trend change confirmation through the momentum candle, you would take a long entry to the same time frame or through the lower intraday time frames. Here is another example. You add your key level of support because of these two reversal points. When price came back here, price breaks outside of the band and the key level, and you also had multiple long wicks forming, which presented a great long trade opportunity. And again, when price came back here, it broke outside with a lot of the candle body outside as well as multiple very long wick candles right at the key level. This is a very high quality long trade setup. Now, going in the opposite direction in an uptrend, you have your key level of resistance because of this reversal point here. As price came back up, you had a Bollinger Band break right at the key level. Then once you had a trend change confirmation to the lower intraday time frames, you would look for short trade entries. This also works the same for trend trades. Here is an example. You had your clear moving uptrend, key level here because of this reversal point. Then once price reached the level and created a Bollinger Band break, you look for an intraday trend change confirmation before looking for a long trade entry. Now, let's get into how to find an intraday trend change confirmation after the bond break out of key level. On the left is the 1 hour time frame and on the right is the 5-minute time frame of the same asset. These two reversal points give you your key level. As price came back down, you had your Bollinger Band break right at the key level, giving you a long trade opportunity. Now your trend change confirmation came through this momentum candle here, which means you wouldn't have been able to enter until the candle closed up here. So we have to use the lower time frame to look inside of this area here for price action that signals a trend change that you can get into this trade at an earlier entry point. So your band breakout. The key level here on the 1 hour time frame is this same area here on the 5-minute time frame. You were using the 5-minute time frame to look for any form of price action that signals a trend change from a downtrend to an uptrend. In this case here, you had a perfect descending channel pattern form. And once the price broke the channel above and making a higher high and breaking above the moving average, this confirms the trend change. You would then take a position long trade using our entry and exit strategy and key tool. So if you only used one time frame, you wouldn't have been able to enter until after this momentum candle formed and closed up here, which is roughly here on the 5-minute time frame. But through using the lower time frame for your trend change confirmation, you got into this trade down here, which is roughly here on the higher time frame. An earlier entry means more profit and a tighter stop loss. So moving on to the next setup, identifying a candlestick pattern at a key level and checking on to a lower time frame or a Bollinger Band break. So on the left is the Euro USD daily time frame and on the right is the Euro USD 4-hour time frame. This reversal point here gives you your key level. As price came back down, you had a long wick candle formed right at the key level, which presented a trade opportunity long. The trade setup here is this same area here on the 4-hour time frame. Notice how you had a Bollinger Band break occur inside of the higher time frame long trade setup. Seeing the Bollinger Band break occur inside of a higher time frame trade setup makes this a higher quality reversal trade setup because the Bollinger Band break represents an oversold region. You would then go to the even lower intraday time frames to find a trend change confirmation before entering a trade. With this, you have a trade setup that have a lot of high quality traits built into them or stacked together. Now, let me show you again another killer method of using the Bollinger Band. Step 1 is you will have to look for a Bollinger Band break like this, followed by a pullback inside. You have to wait for step 2, which involves waiting for the price to make a lower low like this, whereas the RSI makes a higher low, giving you an RSI divergence and signals a possible trend change. The combination of the Bollinger Band break and an RSI divergence make this a higher quality reversal trade setup. Then step 3, you will always need to wait for a trend change confirmation on the same time frame or through a lower intraday time frame than step 4. After you had a trend change confirmation, you would look for reversal long trade entries to the same time frame or through a lower intraday time frame. So in the opposite direction, this works the same. You have your moving uptrend followed by a Bollinger Band break. Price pulls back and moves back inside before making a higher high, whereas the RSI makes a lower high, which creates a divergence. Once you had your trend change confirmation, you would look for short trade entries. To show your support, please hit that like button, as it goes a long way in supporting our routine. And also, go use our link below and sign up for your Bybit account and claim up to $400 to $500 in welcome bonus. Don't forget to comment below right now with the video topics you want us to cover on our next video, as we always read the comments to decide our next video topics. Thank you so much for watching, and I'll see you on our next video.